Hey everyone, my name's Andy. My channel's Finding Value. And I was watching some clips. I've got the comment section behind me, and something kind of hit me, and I just wanted to make a comment. And I was watching Silver Chartist, and he was getting interviewed, and I think it was one of the other channels, and he made a comment, and I was just trying to basically bounce what I do off of what he was saying. Um, and I respect him. I think he's got great opinions. I think he's good chartist. So I think he's a cool guy, and I think he's got very good information and good opinions. But what he said is one of the questions was, have you sold any of your uranium? Your uranium? Have you taken any profits? And he said that he had sold some of his uranium, and he put a lot of his stuff into what's called a free ride. And I like that he used free ride. Maybe he listens to the channel, maybe not. But he said he put it into a free ride, and that he feels that um, he feels good, like this pressure's taken off, or that it's kind of like a no worry type thing. And I have not put really a lot of my companies into a free ride. I'm still riding strong, um, because what I do is, if I were to sell it, if I were to sell my SM Energy, if I were to sell Centennial Development, if I were to sell some of these uranium companies like Baseload or whatever, and put them into a free ride, I'd be sitting there with cash going, what am I going to do with this? They're still of good valuations in terms of the uranium price to gold. And I think we are incredibly early in the cycle. So I'm not putting I haven't really put too much things into a free ride. The only time I put things into a free ride is when I find a better opportunity to deploy capital. And if the opportunity arises, I put something into a free ride and I deploy it somewhere else because of that opportunity. I have done some of that just because the charts looked kind of bad for silver a while back, but they looked really good and prime for rare earth metals. So I did take some there. I did swap it over. I was very upfront with the channel and what I was doing, and there were some people who didn't like what I was doing. But I still had profits riding, and left it to ride. And I wanted to make sure that everybody knew what I was doing, because they could partake on exactly that. It worked out very well. I made a lot of money in rare earth metals, and I put that back into a free ride, and I transferred the money back into something else, um, to have that original base money making me money. It's kind of like my trading money, so to speak. And then I leave it if it's got good value and the charts look good in wherever it's at. And then I only move it if I see a better opportunity, and it's only with that particular chunk of cash that I have. That is my trading cash that leaves profits everywhere. I'll say it's a diarrhea of profits left in a whole bunch of different companies all over the place, and some of them are pretty big. I've done some very good, 30-40% increases in a month or two, in a few months, and I let it ride. Some of them are even bigger than that, and it makes a difference because you can kind of go, and it's in an account that doesn't get taxed. I do it pretty well, so there is that. And then there's ones where I don't put a lot of money in it. It's more risky, and I just let those things ride. So I wanted to talk about putting things into a free ride, trading in and out, and I don't do that if the valuations are good and I don't have a better opportunity to swap into. If there's no better opportunity, then there's nothing to go into. So just leave it. That's my opinion. But some people are different, and some people, psychologically they are different, and they feel comfortable putting things into a free ride and taking your money out, and that it's a popular thing to do. There's something else that I wanted to talk about as well. It's oh, I get it. Gold loves a high interest rate environment coupled with high inflation. That's exactly right. That is the best environment for gold. It's when interest rates go up and inflation is going up faster. So you've got, if this is inflation and it's going up with time, interest rates are going to chase it higher. That type of environment where you have a real negative rate and you've got increasing inflation and increasing interest rates, is the best environment for gold. It will take off like no other. That's what the 1970s had. It had an increasing inflationary environment with increasing interest rates. And what that does is it basically leaves you with gold being your only option as a large investment. You don't want to go into bonds, you don't want to go into stocks, and everyone just wants to jump into gold. And that's where gold shines, literally. It says in that environment, you have high interest rates, but if those interest rates don't keep up with inflation, you still have a negative real interest rate. And gold protects not from inflation, but from a negative real interest rate. I learned this part from Lynn Alden. So that's how gold keeps rising in spite of interest rates going up. Even if the Fed does rate caps, with inflation, there's even more of a negative real interest rate. And gold goes to the moon. It took me years to finally understand this, and you've got it nailed to the T. That's exactly how I see it. So it's the real negative rate, and it's the rotation of money. And that big rotation of money has nowhere to go but gold or commodities. And most prefer gold because it's basically the equivalent substitute for bonds with the risk portion in an inflationary environment. And that's what I'm hoping for, and that's what I think is going to happen. Is exactly what you described, a high inflationary period with interest rates chasing that inflation and having a real negative rate. I think that's the environment that we're coming into. Fingers crossed, because that's what I'm betting on. And to know that stuff is very valuable of what she just learned, or I think it's he or she has learned. So coming down, and there's a lot of people like playing with margin and stuff like that. I don't use any margin. I don't borrow money. These things are volatile enough and they're leveraged enough where you can make a ton of money. You don't want to lose. You don't want to be liquidated. So what you want to do is you want to be able to hold on. You could see 30-40% swings like this. And I don't want people to have to sell out if you don't have to. It's important to stay invested and not worry that you have to have a margin call or that it's getting close. I just don't think I can't operate that way. I can't do it myself. So but if you guys can do that, that's up to you. But I can't. Margin and loaning money to buy stocks, I can't do it. It says, can you comment on Bannerman in context with its history? It hit $1 back in 2010-ish, but I have a feeling it's going to go much, much higher. What are your thoughts? Well, a lot of these uranium companies, they have diluted their shares. And what that means is that they had to raise money in order to survive the downturn. And when you've got previous price highs, they've diluted that money or diluted their shares to raise money. And it means that when they go back to the upside, it's going to be harder to hit their old share price. Their market cap's going to be larger at that same share price that it was years ago. It can still hit that share price, but it's going to be harder now that they've diluted so many shares than it was before. So I think it can probably hit some of those areas again. But it's just going to be that they're going to be at a much larger market cap when they do it. And a market cap, what that is, and a lot of people know it, but I'll just explain it. Market cap is your outstanding shares times your share price. It's the size of the entire company. So if you've got shares out there that are just 1x, right, and you're at 100 million, and then when you come back and whatever price it's at X price, if you dilute your shares by 2x, when you come back up to that same price, you're now going to be double the market cap. You'll be 200 million. So it's harder to get to a 200 million market cap than it is to get back to 100 million, obviously. So when you come back up, and a lot of these companies that diluted their shares, UU is one of them that's done a lot of share dilution. And there's other companies that diluted shares quite heavily. When they come back up, it's going to be a lot harder to get back to their old share price. It all depends on the uranium price and how high the uranium price gets, and the development that some of these guys have on their projects and how developed and how they progress with their projects. There could be a lot of companies that never really develop their projects. They go up a lot, but they just don't, like, they're just there and they have their name. I don't think a lot of them that went through this downturn are like that, but we'll see. We'll see the technical problems that some of these companies will hit. I like Bannerman because they are a couple years out, 3-4 years of actually putting in the they have to first raise the capital, but to spend it and put in the project and get it finished in 3-4 years. That seems pretty, it's like they're set up pretty well. They've got a lot of things defined pretty well in their pre-feasibility studies and stuff like that. So I thought that Bannerman was actually very well positioned for this next bull market. And I don't think the bull market's going to be this ramp up and completely crash. I think it has to remain elevated. But I do think we're going to get an original kind of, we'll call it an original push. It's going to be a bunch of excitement in financial type people, or they're just going to pile money into this and probably drive things a lot higher. So they're going to get this big financial push of money, like dump truck of money just coming on in, and we'll go into some bubble. And then I think the bubble will come back, but it'll come back and hopefully stay above the cost curves. So I think that's probably what's going to happen. We'll bounce around the cost curves and then bubble up and go back around the cost curves and come back up. Maybe. It's really tough to speculate on what price will do, but the cost curves, I think, at a minimum, uranium's going to probably have to be around $100 a pound with inflation that we're going to get. And for a lot of these higher cost producers to be profitable. So my guess is it's got to be at least 100. And then I think we could see a spike. I don't know how high, probably very high. And I'm a big uranium bull, so I throwing numbers out, people are going to be in disbelief. So that's kind of where I think this whole thing's gonna be at. And the funny saying here is, so the ticker symbol of baseload is FIND, find. Now they have to change it to found. I mean, I heard that on another interview. So that's, I think, kind of funny. And Christian's going to name his first kid baseload at this rate. And yeah, I think that I'm just reading here. Somebody sold some of their baseload and bought some silver, swapped it to EXK, and that's probably it's a very different company. EXK is more of a developed company that mines silver. Baseload's a very much still an explorer. I'm not doing anything, guys. I'm not touching my stuff or anything like that. But anyway, that's what I've got for today. Hopefully this helps you out. And if this helps you out, give me a thumbs up. Subscribe to the channel if you haven't. And thank you for listening. This is Finding Value.